Business Line of Credit 101, Business Line of Credit, American Express. A business line of credit, LOC, is a flexible financing option that provides businesses with access to a specified amount of capital, which they can draw from as needed. It functions similarly to a credit card, where the business can borrow funds up to a predetermined limit and only pay interest on the amount borrowed. Here are the key aspects of a business line of credit. Key features. 1. Credit limit, the maximum amount of money a business can borrow at any given time. This limit is set by the lender based on factors such as the business's creditworthiness, revenue, and financial health. 2. Revolving credit, unlike a term loan where the entire loan amount is disbursed upfront and repaid over a set period, a line of credit allows businesses to draw funds, repay them, and then draw again, as long as they do not exceed the credit limit. 3. Interest. Interest is only charged on the amount of money that is borrowed, not on the entire credit limit. The interest rate can be fixed or variable, depending on the agreement with the lender. 4. Repayment terms. Repayment terms can vary but typically include a requirement to make minimum monthly payments that cover at least the interest due. Some lines of credit may require periodic principal repayments as well. 5. Fees. There may be fees associated with maintaining a line of credit, such as annual fees, draw fees, charged each time funds are drawn, and maintenance fees. Types of business lines of credit. 1. Secured line of credit. This requires collateral, such as business assets or personal assets, to secure the credit line. Because it is less risky for lenders, it often comes with higher credit limits and lower interest rates. 2. Unsecured line of credit. This does not require collateral, making it more accessible for businesses without significant assets. However, it typically has lower credit limits and higher interest rates due to the increased risk for lenders. Uses of a business line of credit. 1. Managing cash flow. Businesses can use a line of credit to cover short-term cash flow gaps, such as when waiting for accounts receivable to be paid. 2. Inventory purchases. Businesses can draw on the credit line to purchase inventory, especially during peak seasons or when taking advantage of supplier discounts. 3. Unexpected expenses. A line of credit provides a safety net for unexpected expenses or emergencies. 4. Working capital. It can be used to cover day-to-day operational expenses, such as payroll, utilities, and rent. Advantages. 1. Flexibility. Businesses can draw funds as needed and repay them as cash flow allows, making it a versatile financing option. 2. Interest savings. Interest is only paid on the amount borrowed, not on the entire credit limit. 3. Improving credit score. Regular, timely repayments can help improve the business's credit score. Disadvantages. 1. Cost. Interest rates and fees can add up, especially for unsecured lines of credit. 2. Potential for overborrowing. Easy access to funds can lead to overborrowing and financial strain if not managed properly. 3. Variable interest rates. Some lines of credit have variable interest rates, which can increase over time and application process. 1. Documentation. Businesses typically need to provide financial statements, tax returns, bank statements, and other relevant documents. 2. Credit check. Lenders will review the business's credit history and score. 3. Review and approval. The lender evaluates the application and determines the credit limit and terms. 4. Agreement. If approved, the business signs an agreement outlining the terms and conditions of the line of credit. A business line of credit is a valuable financial tool for managing cash flow, covering unexpected expenses, and financing short-term needs. However, it requires careful management to avoid excessive debt and ensure it remains a beneficial resource for the business.